Apple got a positive earnings report staying ahead of other tech companies. So is the stock a buy? Sit tight as we go through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. The company's net sales have grown by 8.1% year on year, reaching $90.15 billion, beating estimates by 1.9%. iPhone sales contributed 47.3% to the total sales, but they still missed the target set by analysts by about 7%. The good part is that Apple's subscription services have added 155 million subscribers as compared to last year, bringing total paid users to 900 million. That resulted in $19.19 billion worth of revenue in the fourth quarter, contributing about 21.3% to the total figure. Next up, Target is readying up for holiday sales and they're very confident about Apple's line of products, and as a result, they've grown their Apple mini store numbers by 3x, reaching a total of 150 shops while giving offers to Target Circle members. Apart from this, Apple executives think that December sales might slow down because of lesser MacBook demand as compared to last December. With all that in mind, let's analyze the chart. So as you guys can see right here, we're now in the 1-day chart for Apple, and as always, we'll first analyze the 1-day chart, then the 1-hour chart, and turn it off to get to the 5-minute chart. But right off the bat, we can see that after we got the earnings report, the stock went up by what I believe is about 7%. Yep, about 5.35% and 2% over here on the gap up that we got from 27th October's trading session into 28th October's trading session. So if we look at the earnings factor over here, we've already discussed this, that we've got a surprise on both the EPS and the revenue, which is of course a good news. But like we've already discussed that Apple has commented about its iMac sales, right? Its MacBook sales, and why they believe it will slow down around the holiday season. So, such news plus the fact that we're getting a dividend on 4th November will probably mean that we'll hover around this range and then, or we might even go above, right, into the 160, $165 range and probably get a pullback after we get the dividends because, once people have gotten that dividends and even most people that have long-term positions and when they want to sell their positions either in a loss or a profit, they'll usually wait for a dividend, and once they get that dividend, that's when they'll eventually sell. So these factors combined would probably mean that we still have a few days left for growth, and after that we'll probably get a well-deserved pullback back into this range of somewhere around, I believe, $150, right? We're currently standing at a price of 155.74. We started this candle around 148, right? So as we can see, we did beat the $150 resistance, and over here we did beat the $152 resistance as well, but we're currently standing somewhere around the $155.5 range, right? So of course we have a resistance up over here around $158, so that would be next in my opinion. And of course, if we look at the price action previously, right, if we look at the past price action before this earnings report came out, we can see that we were still kind of building up a bullish trend, right? We did get a pin bar candle on the downside, which indicated somewhat of a downtrend, but we still beat that and canceled it out. Over here, we hit the price of 152, got resisted, went all the way down towards $144, I guess, pretty much, right? And then we reversed and ended that day off around 145. So if we take into account just this part, then it would have probably continued a bull run anyways. So with this earnings, right, it's not something out of the blue. This bull run, or rather this somewhat of a reversal, was pretty predictable, I would say. And even if we put Apple against other big stocks in the tech space like Meta and Google and Facebook, right? Wait, Meta and Facebook are the same thing. I'm sorry for that, right? So Apple, we can see, of course, is performing better than all of them. And we already discussed in our previous analysis video that they'll probably get good earnings. And once they do, they will go up, right? The stock will go up. And considering the fact that, we've gotten updates about the iPhone 15, and even though we did get that news that we already talked about, saying that MacBook sales will probably close down, or rather, I'm sorry, not close down, but slow down. But we can see that news did not really have any effect on the 28th October trading session. It might have some effect on Monday, right? If we look at the broader market conditions, I won't show them right now, but we can see that, we're currently kind of overbought for some stocks. So even though we might get a gap up for some time, but that gap up will soon fade away and we'll eventually come down back into this $155 range. That is my opinion and prediction for Monday. Overall, if we talk about the stock, it's a great stock, of course, fundamentally, financially, everything, right? And even while stocks like Amazon and even Tesla for that matter are crashing down, we can see that Apple is still pretty much holding its levels, and we've already gotten a streak of, we can see that, well, I can't even count how many positive earnings that is. So we can see that the company is performing really well, and there's no doubt about it. That is why I am bullish on the Apple stock, and it is a good buy in my opinion. Even if it goes down all the way down to $100, I know that it will bounce back and recover back into the $200 range in a few years. Of course, it won't give you crazy returns because it's an already established company, so it won't give you 100x or even 10x returns for that matter, but it can definitely give you 10, 12, 15%, or even 20% stabilized returns. That's all for the 1 day chart, so let's quickly move on to the 1 hour chart. So now that we're in the 1 hour chart, we can see something that tells rather a different story altogether, right? So if we look at 28th October's performance, we can see that even though we got a pin bar on the upside, we did go up a bit, got resisted over here, got a pin bar on the negative side, another pin bar on the negative side, and another pin bar on the negative side. But there's something specific that I want you to observe, right? All of these bodies got smaller and smaller and smaller, right? This indicates that both buying and selling pressure was rather squeezed in, right? Buyers and sellers were confused, there was indecision in the market, and it might lead to either a breakout or a breakdown on Monday, right? We'll get in the 5 minute chart real soon and analyze the aftermarket session as well. So that should give us a better position and data about where it will get on Monday. But if we look at the previous performance as well, we can see that we did get a few pin bars on the upside over here. So this gap up could have been predicted by that, right? Overall, if we look at this day, we can see that it was pretty much a recovery, right? We did fall down and we did kind of recover. It was a normal pullback day. Before that, pretty evident bull trend over here, right? So it was pretty obvious that it would get halted over here, but the good thing is that we did not make a lower low. So we did, even though we came over here, we were still above the starting point. So as long as we don't break 142.7, we are pretty good. With that, I believe there's nothing much left to analyze in the 1 hour chart. So let's quickly hop on to the 5 minute charts. So now that we're in the 5 minute chart, let's quickly open up the extended trading hours to see what happened in the aftermarket. So we can see that the market was pretty much, well, why am I looking at this? Yes, this one over here. We can see that the market was rather sideways, but we were getting some serious selling volume over here, but we did end the day off. Let's quickly look at these candles that we ended the day off in, right? They were pretty just normal bullish candles, but the trend overall seems to be a bit negative, right? We were getting some reversal patterns like this over here, right? And after that, it was followed by a massive red candle. And over here as well, we got a few reversal patterns. So this doesn't look that good. But as I already told you, the stock, the company, it's great fundamentally and financially, so we shouldn't probably worry about that. Let me quickly get on into the regular trading hours so I can show you guys my analysis for the regular trading hours as well. Now, we can see that when we started the day off, we did get a few pin bars over here. We did get a reversal over here, which of course played off pretty well. After that, we hit a double top around 156.5. It acted as a support then. And over here as well, we hit a double top around 157.5. Let me get the horizontal line real quick. 157.5. Right below that, we can see that we have another support around 155.37. And below that, around 154.8. Right? So if we look at the final candles as well, we can see that it was pretty much an engulfing candle, but it failed to become an engulfing candle, right? So there could be two scenarios now. This is really some indecision, but we can see that of course we got a reversal as well. So a reversal pattern followed by an engulfing candle which had a double top over here in the past as well, is kind of confusing even for me, right? But I still guess that, as I already told you, if we get, now here are two scenarios for my intraday traders. If we get a gap down, it will probably go up because of course, and if we get a gap up, it will probably go down. So that is kind of like pretty obvious, right? If we get a gap up between this range around 156 and 157.5, then it will probably go up a bit and then come down. And if we get a gap down between 155 or rather 154, right, this range, then we'll probably go down a bit and then come up. But in case we get a gap up above 157, then we'll probably just go up. If we get a gap down below 153, we'll probably just go down. So that is my analysis. Of course, I could be wrong, so remember that this definitely was not financial advice and you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel, Stox 101, for more such videos. And as always, I will see you guys in the next one.